Hey, what's up everyone? Welcome back to my channel. If you are new here, my name is Carla, and in today's video we have got a hot topic that might affect some of you out there looking for funding. So this is about Truist Bank has officially pulled the plug on their no-doc loans. So this has been a while since that happened. However, I want to come here today and talk about it. That way I give you some updates. So you heard that right. As you can see in the background, this is a major shift that is sending waves across the lending world. It's not just with Truist. The reality is, let's dive into what happened, why it happened, and what you need to know moving forward if you are here looking for funding. This might apply to other financial institutions too. So just be on the look about it and just be aware of the situation. Before we get in the whole information that you are eager to listen, please hit that like button, subscribe to my channel, and comment if you knew about this or this is new to you, and we can engage over there. Let's talk about it. What is the deal? So, not too long ago, Truist Bank, like many other institutions, like I mentioned, it's not just applying to Truist, was offering that they call no docs loans, basically loans with little to no documentation required, meaning you didn't have to submit your tax returns or heavy documentation or financial paperwork or nothing like that. Perfect for those who didn't have everything in order and were looking for quick funding. These loans were especially appeal for small businesses owners, freelancer, or individual with alternative incomes. So here is where the switch up happened. And it's something that everyone needs to know and be aware of. Over the last few years or so, you have seen a rise in defaults and frauds, especially with no-doc loans. This made banks like Truist step back and tighten their lending criteria. So as you see in the background, I just googled that if it's true that Truist cancel the no docs loans, and basically it is true. So meaning they no longer offer loans that require minimal or no documentation, as these types of loans are now largely considered too risky and heavily regulated to restrictions put in place after financial crisis. So basically on this, you can tell they are not longer willing to just take your word for it when you apply for credit or funding. Instead, they are now requiring the tax transcript or paperwork using form called 4506C, which directly pulls your tax information from the IRS. Yeah, that's right. So I know it's a little bit tedious, but that's the way that it is nowadays. So just be aware of that. I mean, that doesn't mean that you won't get approved or you will get approved, but this is a requirement now. Banks want to see verifiable income now. So you have to be aware of that. So why did they pull the plug on the no docs documents? Like I mentioned before, there has been a shift in the banking industry, and they are a few reasons. The first one is rising defaults. Many borrowers who received these loans fail to repay, resulting in higher default rates. Another one is fraud risk. Like I mentioned before, in the background said, is like some individuals inflated their income on application to qualify for higher loans amount without proper verification. This led to substantial losses for the bank. And another one is economic instability. So with changing market conditions, banks are tightening on their lending process to reduce risk. Because of these factors, Truist and other lenders and other financial institutions are now requiring additional documentation, and they are scrutinizing more the process, including tax return through the IRS form, as I mentioned, the 4506C, which provide tax transcript verification. That way they are sure that everything is good to go. So how does this impact you? Well, if you have been relying on these no docs loans, you will need now to have your financial in order. So you have to be aware, and this doesn't just apply to Truist Bank. As I mentioned before, this applies for any financial institution there. Many banks across the board are starting to ask for documentation to verify income. If you don't have your taxes or bank statement line up, this could be a problem because they will simply deny your application and you won't be able to get funding. So be on the look, be mindful that you have to become an organized person, have your finances in order if you want to get funding. And as I mentioned before, the reason that all of this change is because fraud and defaults are on the rise. Banks have lost a lot of money from people making or taking out loans and not repaying them. And let's be real over here. Some folks were inflating their income on application to get approved. With higher rates of non-repayment, banks like Truist had no choice but to put in stronger measurements like requiring tax transcript to safeguard their money because it was not working, it was not safe, it was too risky. Now, this is what you need to know to stay ahead of this trend. Get your paperwork in order. I know. I mean, it sounds boring, but it's crucial. It sounds that you have a lot of work to do, but it's crucial. Whether it's tax returns, bank statement, or business documentation, having everything organized before you apply for any type of funding at any financial institution is going to make the process a lot smoother and your chances of approval are going to be higher. If you haven't filed your taxes in a few years, this is your wake up moment or a wake up call to get it done because more lenders will start requiring this type of documentation, this type of verification in order to consider your application. With all of that being said, don't worry, there are still ways to get access to funding even in this new environment. So don't get overwhelmed because of this. Some fintech companies are alternative lenders like Fundbox or Marcus by Goldman Sachs may not ask for tax return but might require bank statement instead. So just be on the look of that. You have to do your homework. You have to do your research to see what you can find out there that you might be able to get approved. But always do your research and see what their requirements are before you apply. So the best way to get approved for loans now, post no-doc era, is, let's say that you are looking to get approved for business or personal credit lines after this shift. You will need to adjust your strategy. Here are some tips. The first one is have your paperwork in order. I have mentioned this multiple times in this video is because this is a must. So as more banks start requiring documentation, it's crucial to have your tax returns, bank statements, business financial up-to-dates. And here is what you will likely need. Tax returns for the past 2 years or 3 years, depending on the institution. Use form like 4506 C to request the IRS transcript. That way you can turn that in. Bank statements showing regular income or a strong cash flow, especially for businesses, and a profit and loss statement or balance sheet for business owners. The second thing is build a strong credit profile. Even though no-docs loans are fading, having a solid credit score is still key to assessing financing. Aim for a FICO score at least 680 or higher, which will open more doors with your with both traditional banks and fintech lenders. The third way is leverage alternative lender. Like I mentioned before, there is still fintech companies and other alternative lenders that offer more flexible loans. Some might not require tax return, but they might ask for bank statements or other proof of income, and here are a few options. Fundbox, like I mentioned before, offer business line of credit without requiring tax returns. Marcus by Goldman Sachs, a business loan provider that doesn't require as many financial documentation but asks for bank statements. Another one is Cabbage, So this is an option for business owners with inconsistent income who needs quick access to capital. Another way is look into secure loans. If your financials aren't where they need to be in order to get approved, consider a secure loan where you use collateral, like a savings account of piece of property to secure the loan. These loans are often easier to get approved for because the bank takes less risk. Here are some tips of how to take advantage of the current lending environment. Despite the changes, there are still some strategies to position yourself for success in security in credit. The first one is build a strong bank relationship. One thing that hasn't changed is the importance of a good relationship with your bank. So regular deposit, maintaining high balances, on using other products like credit cards and others mix of products can make more likely to get approved for a larger loan. Another one is understand the documentation requirements when applying for loans. Get ahead by knowing what specific documentation your lender will need. Proactively provide everything they require so that your application moves through the process quickly and smooth, and that way you have more chance to get approved. Another way is leverage fintech innovations. New financial technology, including AI-driven lending platforms, are making it easier for non-traditional borrowers to access credit. Keep eye on the newer fintech companies. They have different criteria for traditional banks and may still offer more flexible funding options. Another way is prepare for a hybrid loan process. Many lenders are moving toward a mix of non-docs features and traditional underwriting. So you might still avoid the full tax returns requirements, but could be asked for other documentations like a few months of bank statements or proof of business ownership. Knowing how to navigate this hybrid process can give you an advantage. What is the takeaway of this video? Banks are tightening up their lending policies, and the days of easy non-document loans are fading fast. If you are serious about securing capital for your business or personal needs, the best advice I can give you is to get organized. Make sure your taxes are filed, your bank statements are clear, and your financials are in order. Trust me, it will save you a ton of headache when you apply for a loan. So remember, in today's lending environment, documentation is key. The day of getting big loans without submitting financial information are dwindling. So as Truist and other lenders achieve their policy to reduce risk, this means borrowers need to adapt by ensuring their financial records are in order. So while it may seem like a challenge, this change can eventually benefit responsibly borrowers who have their financial in line or in order, as it weeds out riskier borrowers. With the right approach, keeping good records, improving credits, and leveraging alternative funding, you can still access the credit you need for personal or business uses. By staying organized and aware of the current trends, you will be in a stronger position to take advantage of a new lending opportunities as the landscape continue to evolve. And there you have it. If this video helped you somehow, or you know someone who might benefit or need this information, go ahead and share this video with them. Also, don't forget to hit that subscribe button, like this video, and comment below if you knew about all of this situation. And if that's the case, I will catch you in the comment section below. I will see you in the next video. Bye.